Hello everyone and good morning to you. This is Rachel live from Kalkine Studios and you're watching The Early Trades, a show where we share with you a glimpse of the Australian share market at the open along with the global and domestic drivers triggering market momentum. Now the broader market edged 0.1% higher just after 10 a.m. this morning, hitting the 7,424.3 mark following a busy morning of third quarter updates. The majority of sectors were in the red, however, with utilities and IT stocks dropping by 0.2%. Aristocrat Leisure, their shares jumped 5.4% to lead the blue chips following news it had secured almost $900 million in funding to execute a takeover of a US rival. The increase placed the company on track for a new record closing high. Shares in pathology tester Healius jumped 4.6%. That's after they announced a 44% increase in third quarter revenue, in part because of COVID-19 testing. Shares in AMP edged 3.6% higher, and that was after the company announced a slowing in outflows from its fund management business in the September quarter. Local currency was up 0.6%, trading above 75 US cents. The yield on the US 10-year notes was 1 basis point higher to 1.64%. That was at 4 p.m. in New York. Bitcoin was trading near $66,283 US dollars and 91 cents at around 7:05 a.m. Australian Eastern Standard Time. That was on bitstamp.net. It peaked at $66,914 US dollars and 88 cents. So now before we move on to today's newsmakers, let's take a look at the news on a major shake-up of rules on the table for Australian crypto players. Yesterday, the Select Committee on Financial Technology and Regulatory Technology, led by Liberal Senator Andrew Bragg, tabled its final report into the regulation of cryptocurrencies, such as Bitcoin and Ethereum in Australia, after 6 months of hearings and submissions on the topic. The 143-page report includes 12 recommendations focused on bringing crypto and broader fintech regulatory framework in line with the industry's rapid growth and development. Salt Lake Potash has gone bust and entered voluntary administration. The materials stock announced the news after the market closed yesterday, with the company's directors labelling the business insolvent. And KPMG Restructuring has been appointed as the voluntary administrators, with Martin Jones, Tom Birch and Hayden White all appointed to take over the business and its related entities. KordaMentha has also been called in to act as the receivers and managers with the company to undertake an urgent assessment of Salt Lake Potash's finances. Moving on, and global mining giant Rio Tinto has pledged to halve its carbon footprint by 2030. The world's second largest metals and mining corporation said governments are setting more ambitious targets and speeding up actions on climate change. The company has agreed to reduce its scope 1 and 2 carbon emissions by 50%, more than tripling its previous target. A 15% reduction in emissions is now targeted for 2025, 5 years earlier than previously announced. These targets are supported by around $7.5 billion of direct investments to lower emissions between 2022 and 2030. Now, before we take a look at some other important newsmakers, it's time for a small break. Stay tuned. I'll be back with more trending updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Hello and welcome back. I'm Rachel live from Kalkine Studios in Sydney. Let us take a look at some more newsmakers from the opening bell. Santos, one of the nation's largest oil and gas producers, has hit a record-breaking $1.14 billion in quarterly sales revenue, as worsening global energy crunch sends commodity prices soaring. Dwindling energy stockpiles across the Northern Hemisphere and intensifying competition for cargoes ahead of the winter heating demand peak period have led to a stunning rally in prices of liquefied natural gas, Australia's third largest export. The strong quarter comes as Adelaide-based Santos progresses plans to merge with ASX-listed rival Oil Search to create a $21 billion industry juggernaut. Moving on, and shares in Aristocrat Leisure released a resounding note of investor support for the $3.9 billion takeover for UK-listed gambling software group Playtech on Monday. The share price touched $48.78 in morning trade and has increased more than 50% this year. The company says prior to market opening it had secured the capital required to back the Playtech deal, which will be funded by a mix of equity, debt and cash on hand. Investment firm Perpetual's assets under management has reached $100 billion for the first time, with slight growth across all its businesses. In a quarterly business update, Perpetual reported its total assets had grown 2.7% on the prior period, with inflows to both its Australian and international asset management businesses. And engineering group CIMIC maintained their guidance after reporting a net profit of $303 million for the first 9 months of the financial year and a 9.2% rise in revenue. The company says $16 billion worth of work was awarded for the period compared to $5.1 billion for the previous corresponding period. The stock last traded at $20.67. And Woodside Petroleum increased sales revenue by 19% to $1.53 billion in the September quarter from the prior period, despite production slipping mildly as the price of oil and gas soared. The average realised price per barrel of oil equivalent jumped 28% to $59, helping spur on the sales increase as production fell 2% to 22.2 million barrels of oil equivalent. The company also entered into a merger agreement to combine BHP's oil and gas units during the quarter. And lastly, let's take a look at some of the latest updates from the US. On Wall Street, shares were mixed with the Dow and S&P 500 advancing while the Nasdaq was lower. US-listed shares of Rio Tinto tumbled. 8 of 11 S&P 500 sectors were higher, and that was paced by utilities and real estate. Techs retreated with Netflix pacing losses down 2.2% after providing an underwhelming outlook. Apple shares were up 0.3%. And the NYSE FANG Plus index was 0.3% lower. Verizon Communications and Anthem were higher after better than expected results. Meanwhile, Novavax shares plunged on another vaccine delay. Tesla will report after the market closes. Its shares edged 0.1% higher. Well, that's all for now for the early morning trade show. Stay tuned to Kalkine TV as we have many more shows lined up for you with live updates across the economy, markets and sectors. I'm Rachel, signing off for now.